Hello, 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 everybody. My Facebook friends out there. Hello, 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 everybody. Good afternoon, good evening. It is, we're about ready to start here our training. One second here. All right. We are live and almost ready to go here. Okay. We shall begin here. All right. Hi, guys. Welcome to our training. Today, we're gonna go over some very important items that each realtor, if there's any realtors out there listening, it's really important that that you understand financing. Financing is everything in a transaction. If there are some buyers out there right now that are looking to purchase a home, we can also, go ahead and listen to this training, because it will help you understand the financing part of the real estate transaction. Okay, as they say, without financing, we do not have a sale. So the more you understand about financing in a transaction, the better that will all be, and the more attractive your offer is going to be. You're going to be able to help your client understand and qualify for the property, much better. Understanding financing is not easy, and but if your buyer understands what they need to do to finance the property, make it simple and easy for them to qualify for that mortgage. Okay, and it's important guys, to know all the programs, mortgage programs that are out there, which it's extremely valuable to first-time home buyers to know what is out there. Okay, one of the first programs that I want to go over with you guys is FHA financing. The FHA financing is the type of financing where most people, most first-time home buyers will want to qualify for. Why? Because it really, the interest rate will be almost the same as conventional, disregarding the credit score, and many challenged buyers out there, and we all know that one out of every 3 buyers out there have credit scores of under 620. Okay, so what do you do with these buyers that have credit scores under 620? The best program for them is obviously FHA. Okay, there's some lenders that don't even finance conventional when your score is 620. 620. You got to have a higher than 620 score, preferably a 660 score, and your interest rate is going to be a lot higher than FHA. Your PMI is probably going to be a lot higher if your credit score is under 660. The only time where it might be beneficial for your buyer to go conventional is if their credit score is above 660, 680, 700. Then you're going to be able to get the best rate, and you're going to be able to get the best PMI rate available out there. But the PMI insurance becomes unaffordable when your credit score is below 660. Okay, so there's a lot of our buyers are going to qualify under FHA. Okay, now what is FHA? Basically, FHA is a program where the lender is guaranteed by the government, by the Federal Housing Administration, that if there's a default, that the government is going to take over that loan. Okay, this is why the lenders make this program so attractive, because it's not that risky for them, to make this program, since they know that if there's a possible foreclosure, hopefully not, but they're going to get their money back from the government. Okay, so the government came up with this program over 50 years ago for first-time home buyers, for people struggling to buy their first home. And the most important thing about FHA is the down payment requirement, which is 3.5% down. When you're talking about the down payment, closing costs, for your realtors out there, there's a very interesting, there's a calculator online that I recommend everybody to use. It's called What's My Payment? And you just download it. It's an application. It's called what'smypayment.com. You go ahead and put that on your server and put it on your cell phone. Okay, this will give you the monthly payment of an FHA mortgage, the down payment, monthly payment, including PMI and so on and so forth. Well, actually, FHA, they call it MIP. Instead of PMI, it's MIP, mortgage insurance premium. Don't ask me why. Okay, but anyway, what I wanted to talk to you about is basically how to get your buyer to qualify with less than perfect credit under this program. Okay, the program, like I said before, the minimum down payment is 3%, 3.5%, and closing costs. There will be closing costs. Okay, you can't just tell your buyer, hey, you can buy a house with 3.5%. The closing costs will range anywhere from 3% to right around 5%. It just depends on many factors. It depends on location. It depends on the price of the home. But you're pretty safe if you figure the 3.5% down plus another 5% for closing costs. So you're looking at around 8.5%. So with around 8.5%, you should be able to get your buyer into a home for that amount, for the 3.5% down plus 5% closing costs. It's very simple. This is not you don't have to be a rocket scientist to figure out the estimated closing cost. Okay, the lender will after your buyer comes in, will give them what they call a loan estimate, and the loan estimate will show your buyer exactly item by item which each cost is. Okay, but it's not up to you, the realtor, to explain every item on that loan estimate, because that's the lender's responsibility. However, it's your job to give your buyer an idea, a rough idea as to how much they're going to need to qualify, how much they're going to need for down payment and closing costs. Okay, so now that we went over closing costs, what are the advantages of the FHA program? Okay, Well, there are various advantages. Number one, we spoke about credit score. Okay, credit score, most lenders won't go below 620 or even 660. So the FHA, they have a minimum. Some lenders have overlays. They'll go down to, most lenders will go down to 580 credit score. Some will go down to 550. But that's a big deal, when it comes to purchasing a home, that you might be able to get an approval even with a credit challenged buyer. Also, the FHA is very lenient, when it comes to collections. Okay, how many buyers out there have collection accounts? Okay, how many buyers out there have student loans? How many buyers out there have charge-offs? Okay, so FHA has the most flexible programs available for those who are credit challenged and have these issues with with charge-offs and collection accounts. Okay. Also, when I sit down with a buyer and I see that they may not qualify because of their debt, because your debt has a lot to do with your qualification for a mortgage. When you figure when a bank figures the qualifications for a purchaser, one of the very first things that they calculate is something called DTI. Okay, that's debt to income ratio. Okay, the debt to income ratio is basically, it's a ratio that is figured that according to their income, their gross income. They always use gross. Don't ever use net. Use gross income and monthly. Remember, this is monthly income. They're not looking at annual income. They're not looking at biweekly income. You have to convert the income to monthly income. Okay, say for example, you got a buyer that's making $60,000 a year. Okay, divided by 12, and you get $5,000 per month. That is the income that they're going to use. Okay, now what are the debt ratios that FHA uses? Okay. Conventional has debt to income ratios, and FHA has debt to income ratios. Okay. Now, the advantage with FHA is that many times FHA will go up to higher DTI, higher debt to income ratio than conventional. Okay. An example of that is that I've had many borrowers qualify for mortgages at 55% debt to income ratio. Okay. Meaning out of that $5,000 that out of $5,000 that they're paying, they're allowed to pay out of the $5,000 up to 55%. Okay, in housing expense. Okay. Hello, Saida. Okay, we're talking about FHA. Coming back to the program, the debt to income ratio for FHA is 55%. An example of this, let's say you have a client that's making $5,000 a month. The debt to income ratio would be $2,750. In other words, it'd be 55% of the $5,000 income. Okay, now the 2,750 means that their PITI, principal, interest, taxes, and insurance, plus their debt, car payments, credit card loans, student loans, cannot exceed a total of $2,750. Okay, most conventional loans are capped at 45 to 50%. So that's another advantage of FHA, where you can get your buyer to qualify for a little higher loan amount. Okay, and also what we said a little earlier, FHA was built for your credit challenged buyers. Buyers that have less than perfect credit. Give me 1 second here. I got to plug this in here. I'm running out of battery. Okay. Sorry. Okay. Now, Um, the FHA, like I said, is primarily a first-time home buyer program. They don't allow investment properties. They only allow owner-occupied properties, and it's the best program to get your buyers that have very little money down, you know, to get them into a house. FHA is one of the only programs that will allow the seller to pay all the closing costs, okay, up to 6%. And generally conventional, they only allow up to 3% closing costs. So you're better off, you know, going FHA if you need closing cost assistance from the seller. Okay, that's another big advantage of FHA. Another advantage of FHA is the money can be 100% gift. So the down payment plus the closing cost can actually come from a relative, could come from family member. Okay, you don't have to have the money. You know, the money can come from other sources. Could be a gift. Obviously, you know, you can't get a loan for it, but you can, you know, you can definitely get a gift from any family member, or any you know, any family member that that has the funds. You know, rich uncle. So not many people have rich parents or rich uncles, right? But anyway, it's a program that is out there. Okay, and that you know, that makes it easier for the purchaser to buy. I had a sale several years ago, and believe it or not, I was able to get the seller to add the closing costs to the purchase price of the house. And this buyer bought at that time, prices were lower, but the price was 350,000, something like that. They bought the house with 3.5% down, and that was it. They didn't have to pay closing costs. The seller paid the closing cost. Seller incorporated the closing cost into the price of the house, and the appraisal came in for that price. So here's a buyer that came in on a almost a $400,000 property, came in with 3.5% down. So he bought the property with $12,000, a $400,000 property. He didn't have to put down any closing costs. This is something that you need to know. There's a new program out there, FHA, where I just found out about it, and I think it's important for you guys to know about it. It's called an FHA VOE only program. Okay, FHA verification of employment only program, which means you can, if you have a buyer, the buyer must be an employee, cannot be self-employed. Okay, but let's say the buyer is working at a ABC company, and the company doesn't give them pay stubs, or you don't have to worry about tax returns, you don't have to worry about W-2s. Normally FHA requires tax returns. Okay, but there's a special program that they will allow a verification of employment only. Okay, like the good old days. Okay, all FHA requires is a verification of employment, which is a simple form that is sent to the employer, and the employer fills it out. Okay, now a third party from the lender will call the employer just to verify that that the employee is working there and how long he's been working there. Okay, but basically there's no other verification of income that is required on FHA. That's a fantastic program, guys. It's something that you can get quick, very quick. You should be able to close an FHA loan probably in less than 30 days. Okay, all we need is the appraisal and the verification of employment, and that's it. Okay. Also, it's good to know what are the limits that we can go FHA. Okay, there are new limits for 2022, which you should be aware about. Okay, and the limits, okay, are, let's see here. I got the limits right here. Give me 1 second here. We can go FHA okay, we can go FHA. And this is really interesting here because the new rule, the new limits that came out for Dade County are loan amount on a single family home, $460,000. Okay, so we can go to $460,000 on a loan amount, and purchase price we're looking at 443,000. No, wait a minute. We're looking at a purchase price of, the mortgage is 460. So the purchase price would be 96.5. Okay, we can go to a value of 476,000, 476,683 on an FHA. That is pretty good. Okay, the limits before were like 420, 430, something like that. And if your buyer buys a duplex, okay, 2 units, okay, a legal duplex, the limit is $588,000. So they can buy a duplex for $588,850. 500. Hold on a second. 588,850 divided by 96.5. Okay, they can qualify. They can buy a duplex for up to $610,000. Okay, that is really unbelievable. Where you can get a buyer into a duplex at $600,000 with 3.5% down. Okay, that is unbelievable, guys. You know, so it's something that you should be aware about. You should be aware. Let's talk about also other types of financing that are available. Okay, we talked about FHA. We talked about conventional. Okay, conventional mortgages are generally mortgages that are done with Fannie Mae and Freddie Mac. Okay, and these are the mortgages that normally we can get with either 3% down or 5% down. And yes, there are conventional mortgages that you can get with 3% down. Okay, less than FHA. Okay, the only catch is that the area that your buyer is purchasing in, there's an income limit. Okay, if the area does not have an income limit, we're good. We're good to go. The buyer can make any income that they want. Okay, if you're in an area that has an income limit, a certain percentage of the median income, then if their income is higher than that median income, then we can't go 3%. We have to go 5%. Okay, but we're going to talk a little further when I finish with the financing. We're going to talk about how to make your offer attractive to the seller. You know, how to make your offers stand out, you know, on top of other offers, because the way the market is right now, it's very difficult to get your offer accepted. When you make an offer, there's 5, 6, 7, 10 offers already in line. And if your offer is not strong, it's not a strong offer, you're going to waste your time. You wasted your buyer's time. You presented the offer and it's not going to go through. And this happens a lot. It's very frustrating for any realtor out there that is working with a buyer to start presenting offers and offers and offers and not get any offers accepted. Okay, and until the market changes, which I don't know when it's going to change, but right now we're still in a buyer's market, guys. So it's not, you know, I don't foresee it changing anytime soon. Okay, but there are different programs out there. If you want to make your offer more attractive, it's obvious that conventional would be the way to go. Conventional financing, and I would, you know, if you have an FHA buyer that has good credit, but doesn't have the 5%, maybe we can get them into a 3% mortgage. Okay, 3% mortgage, almost just as good as an FHA. All right, and you're presenting a conventional offer. Okay, how many sellers out there do you know that are don't want FHA? You know, I don't know why, but they just do not want FHA. Okay, they want conventional offers. So here you have the tool where you can tell your buyer, hey, if we locate a property in an area that has a no income limit, we can go with 3% down. And most areas don't have an income limit. You just find out. You got to call me, and I'll let you know what area, what limit, income limit that area has. Okay, but you're going to be better off with a conventional offer, presenting it to the seller. Okay, now what should you include with your offer? Very, very important. Don't just send an offer, and hope for it to get accepted. That won't happen. Okay, what you got to do is prepare your offer. Okay, it's like let's say you're presenting a case in front of a judge. Okay, what are the things that you want to present to the judge that's going to make the judge make a favorable decision on your case? So you got to think about that. You got to get into the seller's shoes, so to speak. Okay, so. And also emotions have a lot to do with this. Okay, the emotions of the buyer, of the seller. Okay, because we're dealing with people, we're dealing with real estate, homes, which are generally they're generally emotional purchases. So anyway, these are the things that you need to include in your offer. Number one, you need to include a DU approval. Okay, what's a DU approval? A DU approval is an approval from Fannie Mae or Freddie Mac that the borrower has been already pre-approved, and Freddie and Fannie are willing to make that loan. Okay, so any loan that's Fannie Mae approved has a very good chance of closing. Okay, if you only send them a pre-approval letter from a lender, that pre-approval guys is going to be worth as much as the letter. Okay, so yes, you can include a pre-approval letter, but I would definitely include a DU approval. Okay, number two. Number three, another thing that I would include in your offer is source of funds letter, source of funds statement. So if the buyer is coming in with $30,000, they must have bank statements to show $30,000. So what you're going to do is you're going to get their bank statement. You don't have to make a copy of all the pages. Just make a copy of the first page of the bank statement. That's it. White out the account number and send them a copy of the first page of the bank statement along with your offer. Okay, that's gonna make your offer stand out more than other offers out there, on the table. Also, you might want to do this other thing if you want to appeal to the seller's emotions. And I've had this happen many times, where I'll get an offer and the realtor will actually send me a letter, a personally signed letter from the buyer, given his reasons for buying such a beautiful home, and his reasons for purchasing the home, and they've told me that I could share this letter with the seller. So obviously, if I get a personal letter, as the listing agent, if I get a personal letter from the buyer, and they want me to show it to the seller, I'll show it to my seller, and that makes your offer stand out a little bit. Why? Because it appeals to the feelings, to the emotional feelings of the property. A lot of owners, they love selling their property to a family that's going to enjoy the property as they did, a family with children, and mention the schools, whatever. That is a tremendous amount of makes a tremendous amount of influence on your offer. So guys, if you want your offer to be accepted, you do the 5 things that I just told you. Present your offer, and you're going to have a much better chance of getting your offer approved. Okay. There's other companies right now. There's other strategies that you can also use. There are companies out there that will, for a fee, for a fee of 2 or 3%, if your buyer really wants to buy that house, and they're willing to pay an additional 2 or 3% fee. Okay. there are companies out there that will buy the property, that actually buy the property cash, all cash, with no appraisal contingency. Okay, and you'll be presenting an offer, a cash offer, basically, and then the same bank or the same company will turn around and sell the property back to your buyer for the same price that they're buying, and then they can refinance. They can finance the property at that time after they're already in the house. Okay, and one company, I think, gives them 6 months. They'll even rent. They'll rent the house to your buyer, rent to own for 6 months, and then during that 6 months, they have time to qualify and refinance or do whatever they want with to buy the property. So that's another thing that really would wipe out every offer out there. So your offer would be a cash offer. Okay, but not every buyer is willing or is able to pay 2 or 3% more for the property. Okay, getting back to financing again. Let's talk a little about the programs that we have that are available for investor. I don't know if you all have any investor buyers. Okay, but do you remember in the old time where there used to be loans where you don't qualify, no doc loans, where no income documentation loans? Well, in today's world, that really, it's been wiped out. Okay, but there are special programs out there for certain groups of people. Okay, if you're buying a home and you're going to live in the property, you're going to have a primary home. Okay, you need to verify your ability to pay that mortgage. Okay, that's a law in effect, and the law is called Dodd-Frank. Okay, it came about as a result of the bust that we had in 2007, 2008, where buyers were buying properties without showing ability to pay back the property. So, but here they do have a couple of programs out there. They have one program called the bank statement program. Okay, where, say, for example, you have a buyer that wants to move into the property, but they're not showing income taxes. They can't qualify under traditional forms. If they own a business and they have 12, their last 12 bank statements, if they make their deposits in their bank, the lender will qualify the buyer based on their deposits, their monthly deposits. So they can actually get into a house with 12-month bank statements. However, the down payment requirement is not 5%. They have to have a little more down payment. They have to have 10%. All right, they got to have 10% down. The rates are pretty competitive. There's no PMI. There's no PMI insurance. So the closing costs are about the same, but you can get your buyer into a house, primary residence with 10% down, and all they need is bank statements. They don't need pay stubs. They don't need W-2s. They don't need income taxes. But remember that this loan is only available for self-employed borrowers. Okay, it's not available for W-2 employees. Okay, there's also another program out there which uses their 1099. So that's interesting. Okay, where all they need to have is a 1099 showing that they made that income and they can purchase the property with a 1099. But that's basically the only programs available for primary homes. Okay, for people who are going to live in their homes. Normally, they got to qualify. 2 years tax returns, W-2s, pay stubs, so on and so forth. Credit is important. Okay. Now let's talk about the no income program. Okay, there is a no income program out there which is called the DSCR program. Okay, the DSCR program is a program where if you have a buyer that already owns a home, okay, and they want to buy another home as an investment, okay, they can do so with 20% down, no income documentation, guys, no income documentation. No tax returns, no W-2s, no pay stubs. Okay, and you can buy as many as 10 properties, no income documentation with 20% down. Okay, that's pretty good. Okay, normally Fannie Mae, Freddie Mac requires 20% for an investor. They require tax returns, and they require everything else along with it. Okay, so it's good for you to know that for your investors, we got that program 20% down, which is no income documentation. Okay, but you need to show that you own a house already. Okay, you need to show that you own a house and that you're buying the property as an investment. And the property, you should have a lease, or it should be rented. Okay, so basically we've gone over how to prepare your offer appropriately to present to your seller. We went over the financing. We went over FHA, conventional financing. We went over how to figure out people's the buyer's payments. Remember what I told you. Go to what'smypayment.com. What'smypayment.com. Put in the value of the property. You can do it FHA, conventional. It will give you the exact payment based on the interest rate. Okay, you may want to talk to your local lender, your mortgage broker, to find out what the interest rates are going for right now. Okay, you're speaking with one now, so I can at least give you an idea of what the rate is right now, and it's pretty high. It's going between FHA, I believe, is around 4.7. Conventional with very, very good credit, you might be able to get 4 3/4, maybe 5. Okay, but I've seen rates in the range of 4 3/4 to about 5 1/4, 5.5. So that's what the rates are, and they've gone up. I mean, we were closing loans several months ago at 3%, and I remember closing one at 2 3/4%. So the rates, guys, have gone up. Okay, just remember that if you want to be successful in real estate, okay, you can't just sit back and wait for your clients to come in. You cannot wait for buyers or sellers to come in. Okay, you got to have a business plan. Okay, you got to have a daily schedule. Okay, you can't get up in the morning, go to your office, read the paper, and not make any calls. Okay, not have any anything to do. Okay, one of the most important things in real estate is contact. Okay, constant contact. Be in contact with your buyers, in contact with your sellers. Always follow up. Don't ever. One of the worst things to do is not follow up. There are more realtors out there. The reason they're not successful is because they don't follow up. And you gotta understand that a follow up is part of the process of the sales process. Okay, you need to follow up 8 times. Okay, 8 times before you can make a transaction. So if most realtors, they'll follow up once or twice, and that's it. They'll quit. But keep following up until that customer says no. I'm not interested. Thank you. Just keep following up. Don't be afraid to ask. Ask for the order. Okay. Don't be afraid. Always try to give value, more value to your customer than anything else. Provide value. And let me tell you, realtors, buyers out there and sellers, they need us. Okay. They really need us, our professionalism, to help them, either purchase a home or sell their home. Okay. Don't think that, sellers can do this on their own. Okay. Remember, 80 to 90% of the sellers out there, they end up selling with a realtor. Okay. Who is that realtor going to be? It's going to be somebody. Okay. And if you're not out there talking to sellers, it's not going to be you. Okay. So go to, take advantage of all these courses that that the board we have a great board. The Miami Board of Realtors is unbelievable. They have courses on everything, courses on MLS, courses on communication, courses on farming, courses on contracts. Guys, take advantage of the courses that the MLS offers you, that the Miami Board offers you. Okay, you're paying the fee, so why not take advantage of the course? Okay, remember that education is probably the most important thing in your success. Education in your profession. Okay, how can you be a doctor or surgeon without education? You gotta have education. I'm not saying that education only is a medium of success. But you have to have the know-how. Okay, the education gives you power, and knowledge is power. So you're going to feel a lot more confident when you're dealing with sellers and buyers when you have the education. So you got to get that education. So important. I would schedule it. I would schedule in one course every, at minimum a month, one course a month on real estate. And the courses. I mean, if your broker doesn't offer the course, you can take the course from the board. There's no excuse, guys. Okay, no excuse. Okay, if you don't have a mentor, well, when I started real estate, I didn't have a mentor. Okay, my mentor was, well, partially my dad, but he wasn't in real estate. But my mentor was my education. When I learned, when I went to the courses, and I learned, step by step how to work the real estate business. What to do to be successful in real estate. So I can't overemphasize how important it is that you guys get educated. Okay. Well, that's about it for my presentation today, and I hope you guys learned something. And I am on Facebook Live. So for those who are not in real estate, I hope I gave you an idea, more or less, of how you can go about purchasing a home. And if, by all means, if you need any help or any information, any advice, you're free to call me personally. You call our office. We're in Hialeah. We've been there for over 40 years. Our number there is 305-888-2111, 305-888-2111, and we will be we'll be very happy to help you in anything that comes up. Any questions you may have, you can count on us anytime. Okay, guys. Listen, thanks again, and we will see you again next Monday for a real estate training. Okay, thank you, and you all have a good evening, and God bless. Bye.